All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon. And come find me on carnivoretrades.com for swing trading alerts, analysis, and a live day trading. Anyways, let's get into it this week. So the markets finally with a real pullback, and so far it's early. Technically, we have had 4 days in a row down, but it only is really two that are of note. But you can see, finally, we broke the 20-day moving average. This has been going on since April. Look at all those consecutive closes above the 20-period moving average on the S&P 500. Quite a remarkable move, and it's one of the longest streaks in history, if I'm not mistaken. Look at the angle of this rally. Truly remarkable for it to go on for this long. It's even comparable to, if I go to zoom out here a little bit, it's even steeper than the pandemic, right? Looking at this, and even in 2021, right? Even last year, look at the angle here. Quite remarkable, right? So that is finally been kind of snapped here. Now, again, like I just said, it's 2 days. And we're still above, lots of support here, well above the prior all-time high. But we finally got a little move here. And a lot of this having to do with the tariff stuff going into effect. There wasn't any sort of one news clipping that I saw that really did it last night. We all just kind of started rolling over because they were coming out at last night. And I think the tariff rate went up from like 12.5 to 15.6 or something like that. So modestly went up. That's across all trading partners, like the average. But nonetheless, we had a little dip here. Non-farm payroll came in and big miss. I think it was 77,000 versus I want to say 104, 105,000 expected, something of that nature. So definitely a miss. And you can see here the market tried to rally, tried to get a dip by, and then we just kind of failed. And to be fair, we only dropped 50 points lower. I mean, it's not a small move, but we were already down quite a bit before then. So during the cash session, you can see the SPX here, really only dropped for about 30 minutes, and then it just kind of went sideways for the most part. A little weakness here into the close, but nonetheless, we're finally seeing that pullback. Now, the question is, for me, Monday, do we try to pierce and go for a 1, 2, 3, like a 3 black crow pattern into the 50 moving average at 61, right at that 61.50 prior all-time high? There's a whole round number right below it of 6,100. Or do we get some sort of rebound here? We know that this has happened many times before. They dump it down into Friday close, then you get Trump saying something Sunday night. Oh, yeah, we walked back this, the taco trade, right? And do we gap up and bounce there? I do think short term, you might have just seen the ES chart there. Short term, we might be a little oversold. Not on the daily, but on the smaller time frame, the 4 hour here, it's into the basement. You got a nice little support level right here that we hit. So, it wouldn't surprise me to see a bid. But if we zoom out onto the weekly here and we look at the spider, volume, over 100 million shares the last 2 sessions. And the day before that, we had 80 million. So we have volume. We have a weekly engulfing candle with volume as well. And we had failures on Apple. Like Apple had pretty decent earnings. They beat pretty much everything. And they did actually give out a positive outlook with the AI, possible like AI acquisition. And the stock gapped up today and it couldn't hold. Amazon took a pretty good hit too. So the stuff is starting to come in here. We're not seeing that automatic. Now we had, to be fair, Meta had a massive move and so did Microsoft, but definitely seeing some profit taking here. So I think right now it's safe to say we have a confirmed top until proven otherwise. And that's the first time, go back and watch every video I've done for months here. That's the first time I've said that. So again, we've been talking about this. Do not short, do not short, do not short. Now if we're going to get a 10% correction, right? Okay, so what? You missed the first 2, right? And if we get a bounce here, you can catch a short off of that and just trade it off the high. So there was no need to try and front run like a lot of people did and lose a ton of money. Nonetheless, good little pullback here, and we'll see how that goes into Monday. You can see the Qs down 2% today. So again, nice little reversal there. Russell 2000 trying to hang on here. So it has a nice, you know, the weekly pattern is still intact currently. And believe it or not, I know it looks ugly, but, you know, if we look at this inside bar here, 214.15, still holding right now. So that's holding on, and it's trying to hang on to these moving averages too, the 50 and the 200. So again, maybe something happens, we get a gap up Monday, and then, you know, it goes higher. The jobs number today, this was kind of a red flag for the Russell. You can see here, small caps should be theoretically, right, rate cut odds going up. Market now trying to price in 2 more rate cuts this year, or 2 full rate cuts this year. That should be good for small caps, and it wasn't, right? They came down. So that's your red flag, right? You know, don't fight the market when it gives you that signal. So nonetheless, you know, it's trying to hold on here. And, you know, maybe it gets a bounce, but definitely be careful here in this market. Dow testing the 50 MA, so it couldn't break above this bull flag. But, you know, it's kind of testing it back on the downside again, so maybe it can hold up one more time here. SMH here, we've talked about distribution. And there it is, first lower low since the lows. Literally first lower low since the lows. So just be careful. First, you know, usually the first chart damage is like kind of a fake out. Sometimes you can see you know, a counter trend bid. But right now, definitely seeing that weakness, and we saw distribution in this. IGV as well. Again, 50 MA. It's not broken. No, there's nothing terrible. These things needed to pull back, right? All these stocks that we're going to talk about, they all needed to pull back. So we are seeing some profit taking here. Transport's losing the 50 MA. So not good to see that. And yeah, next levels, it's basically right at it at 15,000. Let's look at ZT. So that's a 2-year note. Look at that move. So now, I mean, you got, I mean, we can look at the yield here. This indicates we're going to get rate cuts. I mean, we obviously didn't get them this week, but if this keeps going, we're getting rate cuts at the next meeting, I would think. So, I mean, this is a nasty rejection on the 2-year. Fed funds is up here. There's plenty of room. There's no excuse anymore. If this continues, especially if it takes out these lows. 5s, 10s, and 30s all slammed today. 30s still held up well, still got a good, you know, structure, but I think a lot of bond shorts out there are probably getting squeezed right now. Dollar was down too. We'll talk about that later. It's still holding up though. Housing via XHB. You know what? Hey, it likes the rate cuts, right? XHB up 1.74. It wasn't a Toro show today in certain sectors. It's defensives, consumer staples up 0.5%. XLU up 0.25%. So defensives and heck, even healthcare. Everybody hates healthcare right now. It's up 66 cents on XLV. IYR, it's flat. So it's hanging in there in a horribly down tape. This is not a bad close for IYR. But don't love the failed breakout kind of look. Banks here, XLF down 1.8, so not good to see banks down. KRE, not good to see that. It is trying to get a nice little tail candle here, but definitely not good to see that. Slipping there, broker dealers also slipping as well. Again, ridiculously overbought. There was more talk today about nuclear war. Trump moving some submarines into, you know, like near Russian territory. To me, it's just posturing, and I'll tell you why. Oil's red. I don't trust any geopolitical stuff like that. If oil's red, I just don't do it. If oil starts perking up, now it did perk up earlier this week. I mean, it's green on the week, but today there was that news. It popped for 10 seconds, and then it's back to where it was. So I'm not going to make anything out of that, but oil, you know, it had an up week here. So we'll see if it can hold this area and try to work itself back up. I haven't done anything with it in a while. XLE down today as well. There was earnings out of Exxon, Chevron. So not the greatest performance here. XOP, little possible breakdown there. And OIH, same thing. So the energy sector is just still so hated, it can't get anything going. The dollar we hinted at a minute ago. it had a good week here, but it backed off the 100 MA and the $100 handle like I figured it would. It still has an active inverse head and shoulders here, possibly up to 101.70. But if bonds keep rallying, it's going to be hard for that to hit. But a lot of dollar shorts led to this pop here. Now onto the star of today, gold. Get rid of my day trading levels here. Gold had a huge move, 1.77%. That's a big move for gold. And I talked to you guys last week, and I talked about it this week on my channel, but until September, I said gold was not hedged very well on GLD, meaning that it's not as supportive from market makers. That changed. That definitely changed this week. I think it changed today. You can see here, it's all net green now. This is for August OPEX, which is in 2 weeks. This was not like this at the beginning of the week. So I'm not sure if it changed today. Admittedly, I wasn't paying attention every single day, but this is very positively hedged, possibly up to 315, maybe 325. So if we flip back over to GLD, 325, it takes you up to a new high. So I was still in the case that gold is going to consolidate here. And that might be the thing. Maybe it cools off. This could be a one-day wonder. But right now, it definitely looks like those hedges changed positive. So gold is in a pretty good position here. Miners as well. Free cash flow, right? So they're minting that free cash flow. Look at how it was a few years ago. And gold at these prices, and if it goes higher, I mean that's going to be just another tailwind here. Speaking of tailwind, and this is supportive for the market in the overall, and it's been one of the reasons why we said don't fight this market. And again, it doesn't mean we can't have a correction, but the Treasury essentially just doubled their liquidity buybacks. I believe yesterday or the day before. It's pretty wild, and this is what fiscal dominance looks like. So, I mean, if you wonder why we have the steepest angle in the market, right? There's liquidity out there, and they're throwing it at this market. Silver is a little bit less bullish dealer-wise, but, it had a pullback this week. It is up today, holding the 50 moving average. Platinum also getting bounced at the 50 as well. Palladium kind of getting bounced at 1200. So those metals did pull back, and my copper got slammed. I say my copper. We had a trade on this in the trading room. Made a quick buck on it earlier, and we're still holding a small runner. Actually, I scalped the drop on Wednesday. So again, Trump just can't make up his mind whether he wants to tariff this thing or not. And you can see, I guess now it's not, but down to 440. I think a bounce here to 460 could be possible. Maybe even back to 475, the 200 MA, but. What a drop there on copper. I mean, this is ridiculous. I mean, and this is copper, right? This is not some small cap stock. That's like the 9th largest market cap of any asset in the world. And this is moving 20% in a few hours, multiple times this year. So pretty just ridiculous stuff. But I think it's good for a bounce here. Just wild. All right. Bitcoin today and this week. Really kind of a nothing burger, really. I mean, yeah, it's down today, but, a little bit of a nothing burger for the most part. It's not even down that much, honestly, considering. So it is at the lows of the day right now. But, we'll see if it loses this area here. You got 110, you got the 50 MA at 112. There's definitely levels down here. ETH down 4%, but still has a higher low here. So again, Bitcoin dominance a little bit weaker than normal. Look, and even right now, gold, as the market getting ready to close here, even gold just continuing up here. Could be a little bit of a geopolitical trade. A lot of the time when you sell off on a Friday, sometimes you see a flight to safety right into the weekend. Bonds right now are still bidding. ZB is up. TLT is basically at the highs of the day. So maybe you see a little bit of a last minute bid there. But right now, yeah, nice to see a pullback here finally, and maybe some price discovery. Overall, we got to see how this develops. I still think a lot of support at 61.50 in the short term. But right now, definitely with the volume, definitely with those weekly candles, it's telling us we have a high in place for the first time in a while. That does not mean it is 2008. That does not mean we're going to crash 80%. But, we may be starting to get ready to see a dip finally. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on ConoverTrades.com. I'll see you guys all next week.